name is Germaine. Welcome, my name is Germaine. I am a volunteer with CNP. CNP is the Council of Nigerian Professionals. However, we do cater to people of different cultural heritage. You will get to learn a bit more about CNP in a few minutes. For now, we will begin with our event for today. So we will be meeting with two special presenters and guest speakers. They will have time to tell us a bit more about taxes, personal and for business. So if you're here for your personal knowledge or for your business, this is a very good event and investment of your time. Thank you. Next slide. We will go to the anthem.
Our home and native land, through patriarchal, we go, hearts we see, the true North strong and free. From far and wide, O God, we stand on your knee. We stand on God.
Thank you. Next slide, please. So to read the land acknowledgement in English, we will call on Oreofe Oluwadimeji.
In the spirit and the intent of the Truth and Reconciliations Commission's recommendations, we acknowledge the traditional indigenous territories on which we gather at the beginning of all CNP meetings. By learning, understanding, and acknowledging, we wish to pay respect to Turtle Island, Mother Earth, and to the rich indigenous history of Ontario. We recognize that our work takes place on traditional indigenous territories across Ontario. We also wish to acknowledge that CNP head office is located on traditional indigenous territories of Huron-Wendat, Haudenosaunee, most recently the territories of the Mississaugas of the Credit. This territory is a part of the District 1 Spilling Treaty, an agreement between the Anishinaabe, Haudenosaunee, and the Allied Nations to peacefully share and care for the resources around the Great Lakes. This territory is also covered by the Upper Canada Treaties. We wish to express gratitude to Mother Earth and for the resources we are using, and honor all the First Nation, Métis, and Inuit people who have been living on the land since time immemorial. Thank you.
Thank you, Oreofe. So to read the land acknowledgement in French, we will call on Oshobogie Idode.
Bonjour. Dans l'esprit et l'intention des recommandations de la Commission de vérité et réconciliation, nous reconnaissons les territoires autochtones traditionnels sur lesquels nous nous réunissons au début de toutes les réunions du CNP. En apprenant, en comprenant et en reconnaissant, nous souhaitons rendre hommage à Turtle Island, Telle-Mère et à la riche histoire autochtone de l'Ontario. Nous reconnaissons que nos travaux se tiennent sur les territoires autochtones traditionnels de l'Ontario. Nous tenons également à souligner que le siège social de CNP est situé sur le territoire autochtone traditionnel des Huron-Wendat, des Haudenosaunee et plus récemment sur le territoire des Mississaugas de New Credit. Ce territoire fait partie du traité District One Spoon, un accord entre les Anishinaabe, les Haudenosaunee et les nations alliées, et ce pour partager et entretenir pacifiquement les ressources autour des Grands Lacs. Ce territoire est également couvert par les traités du Haut-Canada. Nous souhaitons exprimer notre gratitude à la Terre-Mère et pour les ressources que nous utilisons et honorer tous les peuples des Premières Nations, Métis et Inuits qui vivent sur la Terre depuis des temps immémoriaux. Merci.
Thank you very much, Oriofe and Oshobogwe. Oriofe and Oshobogwe have been long-standing volunteers at CNP. We do have a lot of opportunities to volunteer. So please reach out to any CNP member and you'll be able to find ways to volunteer. Thank you. So today's event, we do have Funke Eyitayo. She's a business services specialist. We also have Germaine Nkemngu. I kept trying to pronounce your name. I do hope I got it right. Germaine is a director of sales and marketing. So they're both here to give us insights, to break it down for us. And that's why it's titled, Let's Talk About Tax. All those questions that you have nagging on your mind, whether it's regarding your personal tax or your business tax, they're here to break it down, make it as simple for us to understand. So please stay tuned. It's just a couple of minutes away to begin. Next slide, please. So this is the event that we had 2 weeks ago, and we had an opportunity to meet with two wonderful ladies in the educational world, and they told us how to better understand the Canadian school system. It's now available on YouTube. The link to the YouTube page will be shared in the slide, in the chat room. So feel free to copy those links as they become available so that you have the opportunity to reflect on the events that we've had in the past. Next slide, please. Now I'll call the president herself, Lady Abba, to come tell us a bit more about CNP. Lady Abba, over to you.
Good evening, everyone. Thank you so much, Ms. Dianye Michelea. Ms. Dianye is a passionate volunteer, and she's an HR specialist with over 2 decades of experience. Thank you so much for all you do. And I use this opportunity to welcome everyone. Thank you so much for joining us. Together, we can support ourselves to ensure that we're being tax efficient in whatever we're doing. So a little bit about CNP. CNP started almost 5 years ago. Wow, how time flies. And the idea was, what can we do as a community to ensure that we shorten the time for people coming into Canada? When I came, I was told I had 2 options. 1, stay on welfare. 2, be a PSW. But I've had over 15 years of banking experience when I came. And I didn't want to be a PSW, and I certainly could not stay on the system. And so people are like, oh, she's never going to get a job. So what can we do to ensure that when people come in, that is not their story? What can you and I do? And that is why CNP started. So if you know anyone new to Canada, or even trying to change, roles between one place or the other, we have a lot of professionals in the community that can educate, that can mentor, that can sponsor, to ensure that they can land and thrive. And if we know where we all are, it makes it easier for us to network and support each other and refer each other for jobs. So we focus on the holistic well-being of individuals and families right here. We enhance leadership and career, business and professional development of members. We have different series that we do. We have the leadership series because we know that most of us had leadership experience back home before coming here. What can they do? How can they meet people that have done it? What did they do to get there, right? And we also have Land and Tribe events for newcomers to understand what they need to know differently. Is it credit? Is it taxes like what we're talking about? Is it even buying a home? And of course, we want our children to know that There are role models in the community that look like their parents that are doing great things. These are many more are some of the reasons why we started CNP. And please go to the next slide. And so I already said it, mentoring new Canadians and building professional image. We want it to be a platform for information. We want to support our youths and of course, social, professional, economic, and political empowerment. And of course, support small businesses, and you'll see more about that shortly. So these and many more. If you want to learn more about CNP, please go to our website. It is www.cnpngo.ca. Right now, we do have a lot of events going on. And please, when you get to the site, just click on events and you'll be able to see the event calendar. I will pass it back to you, Daniel.
Thank you, Lady Ava. And we will also be pasting the link to the CNP events on the chat page. Just a reminder for housekeeping, if you are not speaking, please have your mics on mute. That way we can all have a very, very wonderful experience, audio experience, hearing and not missing out whatever that is being shared. Thank you. Thank you, Lady Ava. Next slide, please. So we have a lot of activities and events that are already ongoing. So learning coding. We have virtual coding classes that is ongoing. It has already started. It happens every Saturday, and it's ongoing for a couple of more weeks until March 18th. So please log in, have your kids log in. It's never too late to learn, even as an adult. So there's a lot of learning to
about that
classes. So next one, please. So here we also have our CNP events. Today, we know we are talking about tax. The next event that we have after today is strategies to purchase your first home. There's so much information, you have to be prepared. It's better to get it right than get to learn from your mistakes, especially when there's available information. We have the resources within our community. Let's take advantage of them. Some of the other programs and events that we have is International Women's Day event. We have language classes that are ongoing. They're going to start off soon. Last year, a lot of people learned a lot of things. I have kids that are part of the language classes. So do sign on and have, take the best out of the association. There's so much to gain from the CNP organization. So please go ahead to the next slide. We have our Black History Impact celebration coming up. So we do know that we are of African descent. So every day of the year, we are Black history. We live Black history. We make Black history. So the Black History Impact celebration is just an opportunity for us to recognize what's been going on, learn from each other, share our stories. So for this year, on April 29th, we will be having the Black History Impact celebration. We have students already who have submitted their essay contest. So there will be a celebration of all the submissions, and then the winners also will be announced. We will have, it will be held in the city of Milton. So we will have in attendance the city of Milton mayor. We'll also have in attendance the Houghton police chief, and they will be giving recognitions. It's something that we all should find the time to attend, because it's not just to fill our own time, but also to see the stories of other people come to life, and to hear. The more that we spend time together, the more we're able to know, the experiences of others, to encourage one another, and to celebrate. That's the main thing, to celebrate ourselves, because the more we celebrate ourselves, the more we are injecting that positive energy into our community and sharing with others how we can all thrive and succeed as Black people. So the next slide, please. So this is the agenda for today. We have already gone through half of them. So we've gone through the national anthem, the land acknowledgement, we've talked about CNP, we've also talked about upcoming events. We will now be going to our local businesses for you to know what's been happening within the within our group, and then we will jump right into the matter of today. Next slide, please. Over to you, Lady Abba.
Okay, so you have me twice now. So we always like to give honor to whom honor is due. We've done the land acknowledgement, and now our lives will not be helped if we don't have supporters. It's a non-profit, and so when members pay dues and community donate to us, that's why we're able to do what we do. So we really want to do a shout out to our supporters. I don't know if we all know BPTN. It is Black People in Tech Network. They supported us last year during our event. If you don't know them, please look them up. They are really doing great things in the tech world. RBC Royal Bank has supported CNP 2 years in a row. We hope that that's going to continue. Canadian Race Relations Foundation also has supported us in the past. Next slide, please. And our partners, we partner with Procurement Canada. Do you have business? Are you registered for business? Do you want to learn what it means to actually be a contractor to the government of Canada? We're going to be having an event for Procurement Canada sometimes in April. They will tell us how we can do that. And you will even have opportunity to reach out to them personally and learn from them. Windmill Micro Lending is a charitable organization that actually lends funding to people new to Canada that wants to do certification. Because you don't have credit, the banks will not give you money, but they will give you, and they've supported a lot of new immigrants. So if you are in that situation and you need more information about this, please send us, I'll put the email in the chat, send us an email and we will connect you with them. Early Childhood Development Initiative is also one of our partners. They are passionate about ensuring that you and I know our rights when it comes to our children in the education system. Next slide. And now to our small businesses who support us and donate to us to ensure that we continue to stay afloat. JBKM is a virtual TV and radio channel. If you need coverage for any of your events, they are your best bet to go. Next slide. A great read. So this is a book published by me. It's called Authenticity: How My Whammy Moment Shaped My Life. You want to learn about it? It's also on Amazon, Google, and all that. Next. CASA Solution Labs, another organization that is led by an amazing woman in our community. If you have any questions, their phone number is there. Just so you know, all these small businesses, they're also on our website. Next slide. Home Sweet Home. We said we want to talk about strategies to purchase your home. She's actually one of our speakers, has been supporting CNP for the past 5 years. Jane Ecker is your guy if you're looking to talk to a mortgage specialist. Next slide. Mofet. If you go to our website, you understand what I mean. This is the person behind the beautiful look that you see on our website. If you're looking to do anything techie, that is your guy. Is led by Dapo Bankole. Next slide. SMTN International Inc. They ship foods and anything you want from Canada to Nigeria, Nigeria to Canada, and even to US. Again, the phone number is there, but you can also get their details on our website. Next slide. Marriage matters. Marriage does matter in our community. And when we come to Canada, there's a rude cultural shock. And so it's really important to have somebody that can hold your hands and guide you. And also dating issues, singles, she is your best bet. She's been a strong supporter of CNP also. Next slide. CNG Professional Services. They are into forensic investigation, anti-money laundering. So if you have need for any of these services, please visit CNG. All these people that you're seeing, their businesses in our community. Next slide. Pixel. I don't know if you've seen any of CNP pictures, but this is our professional photographers, and even some of my pictures. I mean, their pictures are to die for. So you have any special events, they're your people to go to. Next slide. African Caribbean Grocery. Just so you know, one of our speakers today, this is also a pet project. If you're looking for African grocery, Caribbean grocery, she's your go-to. They are located in Milton, and I believe they deliver. Their phone number is there again. They are on our website. Next slide, please. SDA Business Solutions. Are you looking for business consulting, business incorporation, bookkeeping, HR payroll, and more? They will support you with all the details. Next slide. GTA strategies. You looking to expand and reach out to even politicians. These people, they know their way around. Next slide. For Black African food, this is a food, Nigerian, African, Caribbean grocery, located in Brampton. So if you live in Brampton, visit for Black African food. Next slide. Rest Assured Consulting. Are you looking into making your logos, ad, promotional material, business proposal? This is your guy. Next slide. Yes. Umbia Consulting Services. Umbia Consulting Services. Again, one of our speakers manages this business. So if you're looking for individual taxes, corporation taxes, and more, they will be able to support you. Next slide. NASCI, another technology-based corporation in our community, again, led by one of our own, software development, digital transformation, and so much more. Next slide. Are you looking to buy African attire? You don't know where to get it? Believe you me, they deliver all over US, Canada. Again, their details are on the website. Next slide. MC, do you have an event that you're planning for? Taiwo Julius is an MC extraordinaire, so he will be able to support you. Next slide. Yes, it is true that we work and we get paid and all that, but you know what? Our soul does need to relax at times, and we need to stay in touch with our faith. The House of David can support you if you don't have a church that you visit right now. Next slide. Are you looking to buy a car? Emmanuel Onobanjo at the team under will be able to support you. Next slide. Xperia Financial Group, Adeyinka Oyelu is a financial advisor that can help you with insurance, with investment needs. Please reach out to her if you have such needs. Next slide. And if you want to get a shout out and be on our website, like we just did, and we do this every event, reach out to us at info@cnpngo.ca or contact our digital lead, Mosun, at 647-778-0049. The email will be posted in the chat. Over to you, Ms. Day.
Thank you, Lady Ava. Thank you. I was also going to mention to everyone that all CNP events are free. So it's free of charge. All you have to do is register. Do register, and then you'll be able to join us. However, they are free. So we hope that we continually provide this opportunity to our community. And in order to do that, all those people that Lady Abba has mentioned, are supporting that to happen. So thank you so much, Lady Abba, and thank you to everyone who is advertising and supporting the CNP. Thank you. So now we'll go to the matter of today. So thank you, Ms. Funke, Eyitayo, and Ms. Germaine, Nkemngu. Thank you for joining us. So I'll give a brief about each of them. I'll talk about them, and then we'll get the chance to give each of them time to tell us and to present to us what they have to share with us. So starting with Ms. Eyitayo. She's a fellow of the Institute of Chartered Accountants, ICANN, a member of the Chartered Institute of Taxation, Nigeria, CITN, a qualified payroll compliance practitioner in Canada, and has an MBA in finance from the University of Liverpool. She serves as a treasurer on the board of the Association of Nigerians in Milton. She volunteers on the board of several other not-for-profit corporations and consults for a number of organizations in various capacities, has an experienced and result-oriented business support person with extensive knowledge of finance, accounting, taxation, audit, payroll, and human resources, procurement, and administrative and logistics functions. So going to Ms. Nkemngu. She's a seasoned finance professional with over 15 years experience providing business consulting services both in Canada and the United Kingdom. She's a holder of BSc degree in accounting, an MBA from the prestigious Rotman Business School, as well as she is a CPA designate. She has a designation for CPA. Germaine desires to use her knowledge in tax and business in general to educate individuals on developing strategies, sets, and attain goals that will help them reach their highest potential in a world of limitless possibilities. Her passion is in her humanitarian work while using her experience, her expertise, professional knowledge to support whatever community she's within. Thank you both for joining us. So I will start with Ms. Funke Eyitayo. Please, the floor is yours.
Good evening, everybody. Thank you for having me once again this year. It's my pleasure to speak to everyone with regards tax preparation and filing. Maybe, I don't know, I think the modules for this year differs a bit. I thought we'll be asking questions, but if I'm going to present, I can just give a brief talk on what I have documented, and then if we do have questions, we can answer that after the talk. So do I go on with the presentation? Do we have time?
Okay, I think you can go ahead with the presentation. Just tell us generally everything. At the end, we'll now talk about questions as well. Okay, so maybe you can start off with maybe 15 to 20 minutes to tell us about, or would you prefer to have questions?
No, well, I can free flow. If in between my presentation, anyone has questions or you want to interrupt, feel free.
Okay, go ahead.
Okay, so coming to Canada, the first question people do ask is, am I supposed to file taxes? I did soft landing. I just came and I went back. Am I supposed to file taxes and all that? And the question CRA will ask you is, what's your residency status, or how do you see yourself? Do you see yourself as a resident or do you see yourself as a visitor? Once you have residency status, the expectation is that you do file taxes, Canadian taxes. And another question people ask is, okay, I came in on the 31st of December, I came in on the 29th of December, am I supposed to, let's say 2022, am I supposed to file taxes for 2022? And again, my answer is yes, you are supposed to file taxes for that 2022 if you have children, if you intend to benefit anyway from your tax preparation and filing, especially if you want to buy a house or if you want to maybe start up a business and the bank is asking you for one tax filing document or the other. those things are things that you can just easily pull up and access irrespective. So for people with children, for people with intentions to invest or something, filing taxes is a good idea, even if you just stayed for a day or two before the year ended. It's not like you're going to declare any income. The income you're declaring is pre-landing and it's not taxed. So filing the taxes is to your advantage, not to CRE's advantage. I own a self-employed business and I want to file taxes. How do I file? You file your taxes as an individual, and under the platform, there is the business section there, you file your taxes. I'm just trying to scan the presentation I want to do so I don't take too much time. I've done the residency talk.
Please present. You have 30 minutes. Present.
Okay. So I'll just be reading off them. Okay, so I've done about tax preparation and filing, who can file taxes. Self as an individual, you can file your taxes yourself, or you can file your taxes with a third party. For newcomers, they have this community tax filers that assist in filing. If you do not have anything substantial to file, when I say substantial, as in outside of your T4, which is your statement of income, you don't have anything technical to file, then yes, you can file with the community helpers. But I tend to find out that the community helpers are just that. They don't go above and beyond to ensure that everything that you're supposed to file or claim or achieve with your tax filing is actually done. So you will be doing yourself a great disservice if you're saying, because I want to file taxes for free, you shoot yourself in the foot and you put money, you leave money on the table when you shouldn't. So filing your taxes, you can file yourself if you know what to do. Another another statement I'll make in this regard. Yes, we have a knowledge of using the software, but again, you do not have a knowledge of the intricacies of using the software. I once had a client that he just landed during the year and he says, oh, how much do I charge to file taxes? And I gave him the amount and he said, oh, okay, no problem. Actually, he bought the software, so he will try his hand on it. He filed his taxes. And as I said, he just landed. He landed on I think the last week of December, so to speak. And then he filed his taxes. So definitely, when you file taxes like that, like I said, the income you made throughout the year is not Canadian income. You did not earn it while you were in Canada, so it is not taxable. So he files his tax and they ask him how much income did he make, and then he puts his income that he earned while at home in there and all that. Needless to say, they sent him tax payable and all that, his notice of assessment, and says, oh, you're supposed to pay X amount of taxes. And he's like, how does that work? And I'm like, well, you filed your taxes, so you probably know the answer to that. Unfortunately for him, he now had to come back to me to refile and rectify the anomalies of what he did file. And what I charged him initially, obviously, would not be what I'm going to charge him at this point in time, because I have to rectify and all that. So, as I said, if you don't know what you're doing, filing yourself should not be your last resort. Okay, so we're talking about residency. If you're confused about your residency status, there are actually ways to confirm that. You can go online to confirm on CRA website. You can also call CRA actually. And there is actually a body that they say kind of like determines your status. Things that you need to consider is, do I have a home in Canada? Do I pay rent in Canada? Do my kids go to school in Canada? Do I have access to the health facilities in Canada? Do I have a phone bill Do I use a phone in Canada? Things like that. Those are things that, do I have a bank account? Do I have a credit card? Do I have a church I tie myself to? You know, do I have a membership of maybe CPA or the law society? Things like that. Or am I in school in Canada? Those are things that actually determine your residency status while you're in Canada. Let me see, what else do I have? Okay, so for 2023, the tax season starts late in February. You're supposed to, if you're an employee, you're supposed to have filed your taxes by the 30th of April. If you're self-employed, you have the grace to file your taxes by the 15th of June. However, if you're self-employed and you owe taxes, your taxes are due by the 30th of April. So whether self-employed or employed, deadline for paying your taxes is the 30th of April. If you are employed, deadline for filing your taxes is the 30th of April. If you are self-employed, deadline for filing your taxes is the 15th of June. If you own a corporation, your year end, for instance, is June. You have up till December 31st of that same year to file. That is your year end plus 6 months. You have to file by then.
Wow.
Yeah. So let me see if there's anything. There are
Please
things
mute your mic if, sorry, Ms. Eyitayo, please mute your mic if you're not speaking. Thank you.
again, for filing your taxes, depending on who is filing for you, there are certain documentations they will require. Key will be your statement of income, that's your T4. If you're a contractor, it will be your T4A. If you're, let me see again. The other things that they will probably need will be your charitable donations, your rent receipt. If you're a first-time home buyer, the documentations that the person will use to claim your first-time home buyer amount. Medical expenses, if you paid for prescription drugs or prescription glasses or dental works, those will be necessary for filing. If you did any movement within Canada for work, those claims are also doable, and you need to present that to your tax preparer. If you, let me see, childcare expenses also. If you're a teacher, classroom supplies. Then other claims that you can make, if you're a parent and your child doesn't have income to use his or her tuition credit on, you can use it. Tuition credit, if parents are also in school, you can use that to for what they call non-refundable credits. If you paid union dues, those that are not on your T4, yes. If you did make donations to charitable institutions or corporations, they will have given you receipts for your donations for 2022. You can file those as well to reduce whatever your taxable income will be. So I think technically that will be the summary in brief. Yeah, that's it.
Thank you, Ms. Eyitayo. Thank you so much for that. So we will go on to Ms. Germaine Nkemngu. So I would reintroduce Ms. Germaine. So it's a refresher on our minds who she is. So Ms. Nkemngu is a seasoned finance professional with over 15 years experience providing business consulting services both in Canada and the United Kingdom. So we know, in case we are having plans for the UK, she's your go-to person. She's a holder of BSc degree in accounting and MBA from the prestigious Rotman Business School, as well as she's CPA designated. Germaine desires to use her knowledge in tax and business in general to educate individuals on developing strategies, sets, and attain goals that will help them reach their highest potential in a world of limitless possibilities. Her passion is in her humanitarian work while also using her expertise, professional knowledge. Welcome again, Ms. Germaine. So over to you.
Thank you so much. Thank you. Good evening, everyone. Just want to say a big thank you to have this opportunity to be able to share my knowledge on what I do. And Ms. Eyitayo has already really delved deeply into like the basics of taxes, which is really great. I'm going to be sharing more like a holistic perspective on taxes. I have a presentation, so if you do not mind, I'm going to go ahead and share my screen.
Yes, please go ahead.
All right. Okay, please let me know if you're able to view my screen.
Yes, we can.
Thank you. Okay, so just in continuation, some of the things that I'm probably going to say will be a repetition of what has already been said or things that we already know, but I think it's still just important for me to just give my own perspective of what taxes are all about. So I'm going to be talking about a few things, but the one thing that I want to mention right now is that generally it's really not about how much money you make, but how much you're able to get. And that's what taxes are all about. Before I go into it, I'm going to start with really the basics of what our taxes are. For everybody, whether you're filing individual taxes or whether you're filing corporate taxes, you're going to be filing both federal and provincial. We pay taxes both on the federal level. Federal level meaning that it is the same for all Canadians, meaning that no matter your location in Canada, there is a certain percentage of taxes that you pay to the government, which is the federal government. Then now, depending on what province you live in, we also have provincial taxes that we pay. The Canadian tax system is such that it's a progressive tax system, meaning that the more your income grows, the more taxes you are supposed to pay. And we all fall into different buckets, into different categories of taxes, which is based on how much you earn. And that's how your taxes are being determined. If you fall within a certain bucket, then you pay taxes based on the tax bracket within that bucket. And the system that is used, again, is what is called the marginal tax rate. And what that means is that what you pay for every additional dollar that you earn. I have a very simple example here to illustrate what a marginal tax rate is. And what I have done is, if you look at the right-hand side of this, we have, this is our federal, like I mentioned, we have two types of taxes we pay. We pay the federal tax and then we pay our provincial taxes. So for federal, like I mentioned, is the same regardless of what province you are in Canada, we all pay the same federal taxes and it's just based on the buckets. So like in 2022, which is the tax year that we are currently filing for, these were the different buckets that we had for taxes. So for example, if you earned an income of $50,197 or less, your tax is going to be around 15%. And the bracket again changes based on these brackets that we have here. So, and then this again is only the federal portion of the taxes that you pay. We also have the provincial taxes. Like I mentioned, it depends on what province you are in. I just had a snapshot of one province, which is Ontario, right here. So in addition to, let me just go back again to the first bracket here. Let's say $50,000 is your income. On the federal side, you're going to be paying 15%. But again, let's assume that you live in Ontario. In addition to the 15% that you pay on the federal level, Ontario also requires you to pay 5.05% on your first $46,000. And then whatever the difference between 50 and 40, which is around $4,000, you're going to pay an additional 9.5%. And that is what is called the progressive marginal tax rate, right? Meaning that up to a certain percentage, you're paying this amount, and then moving above that bucket, you pay a progressive additional amount. That's what is called a marginal tax rate. And this is an example right here. Again, this is just a high level example where I took two income levels of two people making, again, very random amounts, $100,000 in income, and then another person making $120,000 in income. Like you can see right here, and again, the illustration here is really just based only on the federal portion, which is a little bit different from the provincial. You can see that the levels are different, but again, it's the same methodology in calculating your taxes. So on the federal side, for example, if you're making 100K, your first 50,197, you're paying 15%, and it's the same for the person making 120, so you're paying around $7,500. And then the next level of income, so this is the next bucket. This bucket, you pay 20%, right? 20.5%. So for this person with 100,000, after you've paid 15% on your 50,000, you only have $49,000 left to pay at 20%, which comes up to around $10,000. But for this person in 120, they still have a lot of money. So they still pay the remaining amount within this bucket, which is 50,190. So they pay a little bit more because they have more money in this bucket. But that is really not all. When you add these two amounts for this income, there is still left over of 19,680. So it moves them into the next bucket, which is this bucket where you pay 26%. So they have additional to pay within this bucket. Meanwhile, for this person within 100,000, their income ends within this category, so they don't have any more to pay. So in total for the federal tax, this person is paying 17,700, while the other person here is paying 22,000, right? And so then in terms of like the average tax rates, if you just look at this, it's around 18% here and 19%. But you can see that there is a difference in salary. So let's even assume that it's the same person. You were on an income of 100,000 and then you had a salary increase to 120. So this is 20,000. We're all excited to have like a big jump in our salaries. But what does that mean for your income? You're paying additional taxes of $5,000, meaning that this is what is called the marginal tax rate, because now the additional $20,000 that you have in your bump in salary, but you're actually paying 26% because this has moved you into the next bucket. So this is really just a high level perspective of how taxes work. And I did bring this in because a lot of people, you know, when we have salary increases, we're always very excited. We expect to see our paychecks jump really, really high. But then the disappointment always comes when you receive that paycheck and you realize that my net income is not as high as I expected it to be based on what I thought was my salary increase. This again is just driven by the tax brackets that we have. So this is something that is very crucial, and it takes me to my next point, like the differences between the types of taxes that we pay. So we have personal income taxes, we have business income, investment taxes. What, for me, my perspective is that do not rely solely on your full-time job for income. If you have opportunities to have other streams of income that can give you more money, please do not rely solely, because your full-time employment is the taxed worse than you can ever have compared to any other streams of income in Canada. That is just the reality of it. Sadly, most of us Canadians, we rely 100% on our job. Whether you have a salary of 100 less, like I mentioned, you have a promotion, you're going to be losing about half of that money. Remember that the example that I had in my previous slide, so you're paying an additional 26%, but that is only the federal portion. Remember that we still have the provincial portion. So if you put everything combined together, you're losing about half of the money that you have had in like an increase or in a promotion. But then if you were on the business side, they are taxed far less. You only pay around 30% or less, depending on what kind of expenses you have in your business. And even only around 25% for investment income that through maybe capital gains or dividends. So generally, personal income taxes are the most expensive tax that we pay in Canada. Business and investment is not only tax efficient, but there are also many ways for you to be able to reduce these taxes legally. And that's very key. We want to minimize the taxes that we pay, but it has to be legal. And that is through the, you know, like we have different deductions, we have expenses that we can claim, which we will go into. So I want to talk about the different categories of tax that we have. One of them being the personal income taxes. Like I already mentioned, this is tax based on, you know, like your full-time employment that you have. And like I said, it has like really limited options in terms of the reductions in expenses that you can really have. So you're really stuck with your high marginal tax rate. The only option when it comes to like your personal income taxes, again, personal income taxes really being taxes that you pay on the income that you earn from an employment. It's really the only way you can reduce this taxable income is through tax credits and also deductions, which I will go into in my next slide. I just want to mention like the typical slips when you're filing your personal income taxes, typical slips that you may have. Again, it depends person to person, circumstance to circumstance. It could be one or more of any of these, but these are the typical tax slips that you might have. The most common one being T4, which is like your employment income, right? That you receive from your employer, that has a breakdown in terms of like your gross income and all the various deductions coming from CPP, EI, long-term disability, RSP, and all of those things, anything that you have that you're paying under your employment, you will typically see that in your T4 slip. And then you also have the other common ones would be maybe a T4A if you have like any pension, any retirement, COVID benefits, self-employment commissions. So those are really typical ones that you may have. If you had any employment insurance benefits, you will receive a T4E. So always look out to ensure that for your activities for the year, you have the appropriate slips that you're going to use in filing your taxes. This is very important because the government keeps track of all of this information. So if you file your taxes and miss any of this, trust me, they will come back for you. So make sure that you always have all of these before you file your taxes. I did talk about tax credits and tax deductions that, are opportunities for you to be able to, like reduce the taxes that you can pay on personal income taxes. What is a tax credit? A tax credit reduces the tax that you owe, and it's usually a fixed amount. It really doesn't matter what income level you are on. It's the same for everybody. There are two types of tax credit. You have the refundable and you have the non-refundable. What a refundable generally means is that your tax can be reduced to zero, and then the remainder is paid out to you in cash. For a non-refundable, it means that even though your tax has been reduced to zero, if there was more tax credit that you have, you will not be paid that extra money. So for example, let's say that the tax amount after you have calculated your taxes, you're owing $1,000, but then you had tax credit of $1,500. In a non-refundable situation, you can see that there is excess credit of $500, but you're not getting it back because it's not refundable. But in a refundable circumstance, the government will actually be refunding you the $500. So in terms of like the tax credits, these are the typical tax credits that you might see. Generally, it's like personal tax credit. Like the other speaker mentioned, we have tuition credits, donations, medical expenses, interest on your student loan, GST, HST credit, first-time home buyer, which I will get more into this. And then we have Canada's workers benefit. The Canada's workers benefit is the most common refundable tax benefit, meaning that if there are any excesses over what you're owing, the government will refund you back the money. But all of these generally are all things that are considered to be tax credits. Then for deductions are things that help to reduce your taxable income. And this again will be based on your marginal tax rate. So the higher your income, the higher the benefits that you see on this. So for example, if you're earning, let's say 100K, and then you have an expense that helps to reduce your taxable income, let's say by 20K, that means that you're now taxable income is $80,000. So that's what is called a tax deduction. It reduces your basis, which is now used to be able to calculate your taxes. At 100K, you're in a different tax bracket from when you're in 80K. No, you're in the same tax bracket in this particular case, but in certain circumstances, it might move you from one tax bracket to another tax bracket. A deduction will make, let's say that a deduction shifts you from a higher tax bracket to a lower tax bracket. That is amazing for your tax refund. So that's what a tax deduction generally will do. And the most common tax deductions that we have is the RRSP, which is the Registered Retirement Savings Plan. We have other like your employer pension plans, we have childcare expenses, disability expenses, any professional or legal fees. If you're moving due to job requirement, relocation expenses, that is also a tax deductible expense. And then if there are any home office expenses that you have, that is also considered to be a tax deductible expense for your taxes. So that was really on the personal incomes, on the personal income tax side. Now I want to talk a little bit about the self-employment taxes, which our previous speaker already covered. Self-employment taxes just means that your any income, either by being a sole proprietor, meaning that you probably own your own business, or you're in a partnership with someone. What does that mean? That you are the one that is responsible for tracking your own income and expenses and for paying your taxes every year. Remember that if you're employed, you're working under someone, the T4, the employer is responsible, or they help you to be able to pay your taxes to the government, to be able to pay your CPP, your EI, and all of that. But in the case where you're self-employed, you are the one that is responsible to track every income and pay all of these things. So the things that you would typically pay is exactly the same as someone who is employed and is, working for some other person. So you still pay your federal and provincial income tax, you pay CPP, but the one difference here is that your EI contributions in this case is optional. But CPP is your Canada Pensions Plan. This is what we pay towards saving towards our retirement. This is by the government, you're required to pay. If you are employed through somebody, you pay half of it. So like this year, the CPP rate is around 5.9%. So you pay 5.9%, your employer also contributes the same percentage of your income as your CPP. But in a case in your self-employment situation, you have to pay both the employee and the employer portion, which means that you're paying 5.9% times 2. So that is one difference between being self-employed and when you're working for somebody. But then your EI is optional. EI means employment insurance, meaning that like in case of you go out of work, you can receive this unemployment insurance while maybe you're searching for a job. In the case of self-employment, it's your election. Do you want it or you don't want it? That's optional. So that's why it's here optional. And then we also have GST and HST if applicable. For GST and HST, generally, if your business is not making more than $30,000 in a year, you're not required to have a GST account. But if you're making above that, the government requires that you have a GST account, and then you collect GST and HST, which you're supposed to be remitting back to the government. So this is what self-employment income is all about. Very similar again to like regular employment income, but again, you are the one that is responsible to track all of this income and expenses and then remit to the government and pay your taxes. So filing your taxes, like our previous speaker spoke, you might be asking, should I or should I not? It's always a good thing to, because filing your taxes is really the only way that the government can consider you for so many different things like benefits. I remember when COVID hit, there were so many benefits that were being given to businesses. And the only way that the government could know these things is through your taxes. Even if you have zero income, you're always encouraged to file, because that's how you keep a record of the fact that you're existing. This is what you do and the government is aware of you, right? And it also gives you the opportunity to be able to have like different provincial and territorial tax credits that may be available out there. And also things like your Canada Child benefit and things like that. All of that are really based on your taxes that you file. So those are the advantages of you filing your taxes. And for a self-employment individual, you may be wondering, what could my taxes be in a year? It's recommended, again, like this is just a nerd tip, save around 25 to 30% of your annual income for tax purposes when you're self-employed. And again, how do you file your taxes? You file your taxes the same way as personal income, which is what is called a T1 general form, which is income tax and benefit return. And that's the same way that, Canadians used to file their personal taxes. There is also the form called the Form T2125, which is a statement of your business or professional activities. That's also something that you file. And again, if you also collect GST and HST, you also have to file that. So those are the 3 different things that you file when you're self-employed. The last piece right here in terms of income taxes that I'll speak to is really our business taxes, like if you own a corporation. We know that most operating business expenses can be deducted from taxable income. Every time you need to spend money to run your business, you can claim it as a business expense. That is the advantage when you own a corporation. What you file for a corporation is what is called a T2 corporate income tax return. And again, most of our corporations, like all small businesses, we call the Canadian Control Private Corporation. And there is also the public corporation. So the difference between these two is that a public corporation just means that that corporation is listed in the stock exchange in the market. Meanwhile, a private corporation is not listed. So for the most part, I know a lot of us probably own corporations, or more recently, a lot of people are now owning corporations. And for the most part, most of our corporations fall within the private because we're not listed in stock exchanges. And we are also considered to be small businesses meaning that we earn our income is like the first $500,000 of your income. And I think with a small business, you're supposed to have a capital of less than 10 million or so, you're considered a small business. The advantage of being a small business is that there are deduction credits that you have. So meanwhile, you know, like corporate taxes, for example, the basis for corporate taxes is 38%. But when you meet the criteria of a small business, there is a small business deduction of 19%. So meaning that already slashes your income tax that you're supposed to pay by half. So that's only 20%. So imagine like in a situation where you're earning, let's say 200,000 working for a company, right? That puts you at the max tax rate. You might be around 40 to 50%, but in a corporation setting, you're going to be paying like half of that amount. So those are the advantages. And that's why I said in the beginning that, you know, when you're working for someone and earning income through, you know, working for somebody, you don't have any choice. You have to pay really high taxes. And there are very limited expenses that you can claim on your taxes. But in the business setting, depending on what kind of deductions that you may have, all of these things can be deducted: your fuel costs, mortgage interest, utility bills, car insurance. So in addition to the fact that you have the small business deduction, you also have a lot of expenses that you can also claim that helps to reduce your taxes. So those are some of the advantages of, you know, like owning a business and working under your own personal business. So in terms of deadlines, the previous speaker has already covered most of this, so I'm just going to run through it. Like she says, for personal taxes, you have to file by April 30, that is the deadline. For self-employment taxes, you have up to June 15 to file. But again, like she mentioned, you must pay, if you're owing any taxes, those taxes must be paid by April 30th, which is the same deadline when you're filing your personal taxes. So even though you have a longer time to file, any taxes owing must be paid by April 30th. For corporation taxes, like she mentioned, depending on where your year end of your corporation is, you have up to 6 months after your year end to file your taxes. But then if you're owing any taxes, it needs to be paid 3 months after your year end. I'll use the same example where she used, where if you're, let's say that your corporation year end is June, you have up to December to file your corporation taxes. However, if you're owing money to the government, you need to pay it in September. So that's very important. That's something that we need to know. And then for GST and HST, it depends on what you elect to do. You could pay monthly, you could pay quarterly, and then you also have people that file their GST, HST annually. If you're either on the monthly or quarterly filers, you have to pay any amounts that are due 1 month after the period. But then if you are an annual filer, you have up to 3 months after your year end to be able to pay. And then we also have what we call the RRSP contribution deadline, which is March 1st. I will speak a little bit more to RRSP in my next slide, or maybe another slide. So in terms of limits, so there are things that are considered to be limits. GST and HST, remember, like I mentioned, if you are not required to register for GST or HST, if your business revenue over 4 consecutive quarters is less than $30,000, but if your income is more than this, then you are required to register for GST and HST. We also have the RRSPs. What is RRSP? It's really like your registered retirement savings plan. This is a government strategy to be able to help every individual, a working Canadian, towards your retirement, right? When most of us retire, you're going to be getting your retirement benefits from the government, right? But then you need to be able to contribute towards that. However, there is a limit that you can contribute in a year in RRSP. The limited amount for 2022 was 29,000 in the tax year, but in this 2023, it has gone up to around 30,000. But in 2022, the maximum that you could, put in your RRSP is 29,000. However, there's something you need to keep in mind is that any individual contribution limit is also capped at 18% of your entire earned income. Meaning that let's say that if you're earning $50,000 in a year, you cannot contribute 29,000. You can only contribute a max of 18%. So if your 18% is below 29,000, you can contribute up to 29,000. But if your 18% is above 29,000, you cannot contribute more than this. So basically, this is the max you can contribute, or the maximum of 18% of your entire income. We also had COVID benefits, which I think for the most part has gone away right now. But just generally, if you were an individual that was making, you made $38,000 in income, any COVID benefits, and the reason I put this here was because last year there were people that were filing taxes that had taken advantage of all the COVID benefits, but then they also had additional income. And they realized that they needed to pay back all of this money to the government. If the government notices that you had any income that was more than 38,000, you may be required to pay back any COVID benefits if you're still receiving it. And then we also have what we call the tax-free savings account contribution rule. I will speak to this in a little bit, but I just want to say that in 2022, you could only contribute up to 6,000 in your TFSA. So the big one here for me is RRSP versus TFSA. This is something that a lot of people talk about. And the reason why these two are so important is because the first thing is that both of them are tax sheltered accounts, meaning that there are zero taxes. What does this mean? An RRSP, if you are contributing towards an RRSP, you do not pay any taxes. And it's the same thing for tax-free savings account. You do not pay any tax, like the name states here, tax-free. Even though it's called a savings account, it's more like an investment account because you put money in there and that money gets invested. For RRSP, you contribute RRSP on your gross income. So before taxes are collected, you already remove your money for RRSP. But for tax-free savings account, it's after you have received your net income, and then if you choose to invest in the TFSA, you're paying after you've already paid taxes. So the difference between these two is that the RRSP is pre-tax, tax-free savings account is after taxes. But the good thing is that both of them are tax sheltered. Tax shelter with the RRSP is that you do not get taxed on that income that you put into RRSP. For tax-free savings account, like I mentioned, you have already paid taxes, then you choose to now invest your net income after taxes. The good thing with the TFSA is that whatever money you put in the account to invest, you do not pay any taxes on any capital gains from that. And even when you're withdrawing, you do not pay any taxes. That is the advantage of a TFSA. It is tax-free. RRSP, you have to pay taxes, but those taxes are deferred, meaning that you're not paying the taxes today. But if you choose to withdraw, let's say you put money in your RRSP and you choose to withdraw after a certain period of time, it's only at the point of withdrawal that you're required to now pay taxes. So there are strategies. When you're working with this tool, there are strategies that you can use to be able to maximize the benefit that you get from both. They are both great opportunities, but there are strategies that you can use to be able to maximize your income. And that's why I said that it's really about how much money you're able to keep and not really what you make. So for example, let's say that your situation, a TFSA is ideal savings vehicle if you're in a low income tax bracket. RRSPs may not be well suited to low income Canadians because like if you're in a high tax bracket, right, and then you contribute towards your RRSP, it is amazing because that helps you to be able to shield yourself from paying that high tax. But if you're already in a low income tax situation, let's say that, for example, your bracket is low, maybe for a lot of women, as an example, you may go into maternity leave. Maternity leave is capped at a certain dollar amount that you receive. So that automatically reduces your taxes that you're supposed to pay because your income level goes down. In this case, if you were contributing towards RRSP in the past, you may want to consider withdrawing from RRSP and making use of your TFSA. However, remember that the funds that you withdraw from your RRSP, you cannot recontribute them to your RRSP. That's another one thing with RRSP. But with TFSA, if you withdraw funds, you have the right to bring it back in. Then if you're in the middle income, your strategy should be to contribute towards your TFSA now and leave room that you can use later. So if you're on mat leave now, let's say that your income annually has dropped to maybe, let me just say 50,000, right? Contribute towards your TFSA now, and then maybe when you're done with your mat leave and you go back to work, let's say you're earning 100,000, which puts you at a higher income level, then you can now re-strategize and start contributing towards your RRSP so that it now reduces your taxes that you're supposed to pay. That's kind of like, this whole thing is just understanding, strategizing such a way that you're able to like really minimize the taxes that you pay. So these are all advantages of things that you look at when you're looking at the different options that you have. Those are the considerations that you're supposed to be able to make in terms of decision making. And then again, like one thing that I wanted to mention is that a lot of us are institutions where many people are looking to buy homes, especially like first-time home buyers. If you're saving towards a down payment on a home, your TFSA might be a better option than an RRSP. And withdrawing under the home buyers plan for several reasons. These are the reasons. You have the flexibility to recontribute your TFSA, meaning that let's say that you have $20,000 in your TFSA and you withdraw $10,000. You do not lose that room of 10,000 that you have withdrawn. You have the option to recontribute back into it. But with RRSP, if you remove money from your RRSP, you have lost the contribution room, meaning that you cannot come back and put the money that you withdrew. So those are the flexibilities that you have when it comes to your TFSA. And then with RRSP, if you miss your payments, you also lose your contribution room. So those are very key things that are very important to know when it comes to RRSP versus TFSA. Also, there is no restriction on how much you can withdraw from your TFSA. While under the home buyers plan, there are restrictions in terms of how much you can withdraw from your RRSP. You can only withdraw a maximum of 35,000 for each spouse. So let's say you're with your spouse, both of you can each withdraw 35,000 maximum for a total of 70,000, but you cannot withdraw more than that regardless of how much money you have in RRSP. But for TFSA, there is no restriction on how much you can withdraw. So again, all of these things will depend on individual circumstances, but this is very important information for you to know and have when you make decisions when it comes to things like this, and this all comes in your tax planning. So in terms of strategies, this may come as a surprise to so many people. Many of us celebrate when we have like great amounts of tax refund. It feels like, you received this unexpected bonus. We are so happy to have this amount. But no, in reality, however, a tax refund simply means that you paid CRA too much throughout the year than you were supposed to have paid. You get your overpayment back as a tax refund, but you are essentially making an interest-free loan to the government. Imagine like if you have to borrow money from a bank, you're paying 20% on whatever amount you're owing, or like credit cards and stuff like that. But then now the government is using your money, no interest. So when you're receiving tax refunds, the government has kept your money throughout the year. They've done different things. They've made money out of your money. At the end of the year, they're giving you back your money and you're excited. Meanwhile, if you had that money earlier on in the year, there are so many things that you can do with your money. So you want to keep your money in your hands and use it. There are so many great ways that you can use your cash flow, again, based on individual circumstances. For your financial security, debt elimination should always be the first thing, then followed by wealth accumulation for everybody in terms of priority. So when you have your money in your hand and to wait until year end and receive it from the government, there are so many things that you can do. You can pay down your mortgage faster. You can reduce your debt, especially targeting like very high interest debt. You can increase your savings. You can maximize your RRSP contributions. You can top up your TFSA. So your goal should not be to receive huge tax refunds at the end of the year. You should be able to request to reduce your taxes at source. At source means that from the beginning of the year, if you know what you're expecting, if you know that you're paying childcare expenses, if you know that you're going to be contributing towards your RRSP, if you know that you have alimony, if you know that you have maintenance, support payments, employment expenses, interest expenses, all of those things from the beginning, make the CRA know, and they will consider all of that before they determine what taxes you will be paying. So you're receiving your money up front than to wait to the end of the year before you get a huge tax refund. So to me, that is my strategy in terms of like, don't be so excited to get huge amounts of money at one chunk at the end of the year. Meanwhile, throughout the year, you could have used that money to do so many things that will be able to, you know, help you gain that financial security that we all need. In terms of changes that we have in the upcoming year, so these are the kind of like high level things that are changing this year, where our contribution room, remember I said that TFSA, the contribution room was $6,000, is going up to $6,500. Basic personal amount again is going up to $15,000. Then we also have new things that are coming up. There's something that is called the first time home buyers credit. So that's like for somebody who just bought a home. So if you bought a home in 2022, what that means is that this is a government federal initiative to make home ownership more affordable for more Canadians. So after the passage of this new legislation in December 2022, eligible first-time home buyers can now claim a $10,000 non-refundable income tax credit. This is double what we could do before. Then this could result in tax savings of up to $1,500. So if you bought a home last year for your first time, don't leave money on the table. There's $10,000 non-refundable income tax credit that you can claim. There is no need for you to apply or to be approved from this. Just enter the amount in your line 31270 of your income tax, and the tax credit, you will have your rebate automatically on this, as long as you bought a home and you meet those conditions. Then there is also something new and exciting that has just come through, which is called the FHSA, which is like First Home Savings Account. This works almost like the TFSA and the RRSP, where it's also like a tax sheltered account that is designed to help Canadians save up for a down payment for their first home. So if you're looking to buy your first home, this is a new initiative that the government has been able to put out there to be able to help many people to be able to afford down payment for their first home. There is a lifetime contribution limit of $40,000 and then an annual limit of $8,000. This legislation is yet to be passed. I think it's coming up this April, so there's really more to come. But again, I just put this out here because this could be a great way for someone who is looking to buy their first home to take advantage of things like this as they come. So this is really what I had to present, and thank you all for listening.
Thank you so much, Ms. Germaine. Thank you so much, and Ms. Funke. This is amazing information for us. So there are lots of questions. So one of the things I will start with, I can start from the chat. So everyone, go ahead, send in your questions in the chat, and we will be able to get the chance to answer them. So the first question here, I know some of these questions are repeat of some of the things that you said, but maybe you can just throw a short highlight on it. It's likely it was missed by the person who is asking, and sometimes other people will miss, but they don't even, when they see the question, they're like, oh, good, this person is asking. So then the first question here is, what are some credits that we should be aware of? I know you had a long list, and that's a good thing that this section is being recorded. It will be available on YouTube, so we'll be able to go back, have another listen, and take notes if you haven't already been taking notes of all the possible tax credits that one can be aware of. So I don't know if you want to take on this question, or we can move on to the next question. What do you think? Funke?
If Germaine can just show like a slide on the screen, so whoever was asking can see that, then we can take other questions so that we don't take time in the presentation.
Okay, I'm sharing my screen again. So like I mentioned, these are the different tax credits that are available to every individual right here. Again, this is not an exhaustive list. This is really just a high level list of the things that, you know, are available to many of us. So we have tax credits and then we have tax deductions. Here are the different types that we have. So take advantage. I won't read through. I'm just going to put it here and you can take a look.
And this slide, because the recording is available, you'll be able to, you know, get access to this information in more detail, where you can pause, listen, take your notes, continue play. So what is your recommendation for someone to file tax themselves? Is it to file themselves or to file through a tax consultant? I know Ms. Eyitayo did, you know, highlight the risks that are associated with tax filing if you are not familiar with it, especially if you're new in the country. It is better to go to a tax professional. And I know she mentioned earlier that if you have very minimal you know, information to plug in, there are lots of other free tax services that are available through the community centers. You can also access that. However, it's always better to work with someone who knows what they're doing. It's better, but sometimes some people are very good in doing things themselves. So you can also, that's why the tax filing apps are also there, and tools are there for you to file yourself if you choose to do that. So I guess it's a personal preference, right, Ms. Funke?
I'll say yes, it's a personal preference. I think most people just run away from parting with their hard-earned dollar. But I think sometimes when we talk Pennywise pound foolish, this is just a replica of that. Yes, you can file your taxes yourself, but is it expedient to do that? What are you actually saving? How much is the tax professional collecting versus how much do you leave on the table? You know, so it's really up to you, but it's advisable to use a professional.
Then the next question here is, what is CRA number? So this question, I'll throw it to you, Ms. Germaine. What's CRA number?
I'm assuming they mean like contact information for CRA.
Oh, that's a good question. Are you talking, but my thinking when I saw that question was maybe the number to file their taxes. So that will be your tax ID number, or you have your SIN number. But if it is CRA number, we can find it and put it in the chat so people can have. So if you're the one that asked that question, feel free to clarify the question you asked, and we'll get back to it.
Yeah, so I'll suggest the person clarifies.
So the next question is, are there ways to reduce tax burden and be tax efficient? I would say yes, and it's all been covered during your presentation, Ms. Germaine, and it's also been said by Ms. Funke. There are lots of ways to take advantage to reduce our taxes. You know, I've had salary increase in the past, and I'm expecting the final, you know, drop in my account, and I get that shock of a heartbreak. We've had instances where people change jobs thinking, okay, I'm changing job for this bigger amount of money. And then they're like, what? I was taking back home much more when my money was lower. So if you know all these things, you're able to negotiate better which tax bracket you want to fall into. So thank you for that presentation, Ms. Germaine. And it's good that this recording is available so people can go back and really look at that structure. In fact, I was just saying I'm going to create an Excel sheet, and put it there and be plotting in the figures and determining what I want to, negotiate for a salary increase. So thank you for that. Another question here is, as self-employed, what is the impact of low income to CPP payout in retirement? What is your recommendation? So this question, I will push it to Ms. Eyitayo.
As a self-employed, can you go over, is the question on the chat? Let me just read it so I'm not assuming.
Yes, it's on the chat. It says, as self-employed, what is the impact of low income to CPP payout in retirement? What is your recommendation?
So if you're paying CPP and the CPP you're paying is low, definitely whatever your payout will definitely be low. So you need to plan towards retirement if outside of your CPP. It's just like saying, I'm saving money to buy a house. I want to buy a house of 500,000. I'm only saving $20 a year. You will not get there. So if you are looking at CPP as a pool of funds for your retirement, then you know that whatever it is you're doing to that pool of funds, it has to be significant. I
And
hope
just to
I've
add, yeah, and just to add to what you said, because CPP contributions are really basically limited, right? So they are limited based on like, for example, you can only contribute 5.95% like if you're employed, right? Then if you're self-employed, in that case, you have to contribute because there is the employee and the employer. And that's why I said that for self-employment, you're doubling because you're contributing both as the employee and the employer. But even with that, it's capped at a certain amount. You can only contribute a certain amount, which is based on how much money you earn, right? And then once you contribute that maximum, which is I think around $7,000 in a year, not exactly that amount, but it's around that. So that's why if you notice some people, your paycheck in the beginning is usually smaller than towards the end of the year. Especially if you're in a higher income tax bracket, your paycheck grows because you have capped the contribution of some of those things. So you cannot contribute any more into them, right? CPP and EI are two of those things that are capped to a certain amount. So for CPP, you can only contribute up to the maximum amount that the government requires you to contribute. That's why if you're planning towards your retirement, you have to use other avenues like the RRSP that we talked about, right? Like you can contribute into your RRSP because it's also part of your retirement. So you can make contributions into your RRSP if you want to, have big payouts when you retire. So those are some of the things that you can take advantage of because CPP alone is only based on your max. But then if you want more, take advantage of other things like RRSP, and then depending on what type of other things that your company may have, your company may also have RRSPs, which are other like retirement plans. RRSPs are really great because like for most companies, depending on the company that you work for, there is also a match. Let's say that your company will say will match $1 for $1. So you're basically doubling your money when you contribute to it, but those things are optional. The only requirement is CPP. RRSP is optional, but it's a great tool to use because your company is helping you as well. And then in addition to that, it shields you from that initial taxes that you're supposed to pay.
Thank you. So the next question here is, at what stage would you recommend a business owner pay into EI?
I think all of these things is just based on individual circumstances. For a business owner, there is no specific requirement. It's an optional thing. But everybody loves to feel that safety in case, there are days that you're not able to work, or depending again on individual circumstances. Women, as an example, if you're in, like in the stage where you're having children, you may need to go on maternity leave. Are you comfortable to be off work with no pay? Or do you want to at least be getting something? Because that's what EI, that's the benefit of having EI, right? In the days where maybe you're not employed, you're not getting any employment income. Are you able to, is your business giving you enough that you can have any income from there? Or would you want to take advantage of those government programs that can provide you with some level of income during your off work days? So again, it just depends on individual preference.
I know personally I have benefited from EI. There was a time I was working on contracts a lot. So in between when my contract ends, EI kicks in. So at the end of the day, I didn't really feel that burden of not having a job. And it was because of contributions to EI. So thanks for highlighting that, Ms. Germaine. What is your recommendation to registering a business? Sole ownership, partnership, or corporation? So this question again, I will send to Germaine. What will be your recommendation? Is one better than the other?
No. No, it just depends again on what your goals are. All of them are great. All of them have, in terms of like, whether it be in a sole proprietorship or a partnership or corporation, the good news is that you can deduct expenses from all of them, right? Yeah, with a corporation, the advantage of it is that you have the small business deduction, which really helps to significantly reduce your income, your taxes that you can pay. Meanwhile, for a sole proprietorship or partnership, that is categorized under your personal income tax brackets. So that's the difference. Yeah.
So in all, we should. Sorry,
Yeah.
go ahead.
No, I was just going to say that I don't know if Funke had anything else to add to that. But again, I don't think that we can say that one is way better than the other. It just depends.
Yeah, like you rightly said, it depends on what you're trying to achieve, right? But if you're looking at it strictly from the point of view of, oh, I want to save, I want to be able to write off as much expenses as possible. Even if you're going through the sole proprietorship, you can write off expenses because you'll be doing the sole proprietorship tax filing under your T1. What I tend to advise people is that unless you actually have to, creating a corporation should be your last kind of like your last bus stop, so to speak, because you'll probably now be looking at the expense of getting a professional to do your books, getting a professional to file your taxes, and those expenses are not cheap. So even if you're looking at finding out how to reduce your tax payables, and then you enter paying expenses that were not, you did not factor in, then I'm not sure if it was an intelligent decision. That's on the one. On the second one, TRA is going out now for people that they call them incorporated individuals. What that means is your incorporation, you just incorporated because you want to get a contract, you want to get a contract job from a certain employer. So you're an employee, but you're just a contractor that had to go and get a business registration for that task.
I mean,
Just come again.
No, go ahead.
Just for that particular job. It's not like you have a corporation that you use to service different corporations and stuff. If you're an incorporated individual, there is coming down on such people now, and soon enough, your taxes will be at the same rate as the individual. Because what you're doing is you're benefiting from the tax rate of the corporation, but you're an individual, which is not right. So ideally, if you don't want to get into unnecessary trouble, if you're a corporation or you want to incorporate because you have service you're providing to various people that you will not be seen as an individual providing services, so to speak. So I'm not sure if I'm explaining this properly, but it's just for you to understand that, let's say, for instance, it's not unusual for you to see a PSW or a nurse, so to speak, a nursing assistant or something. They go incorporate, but they're only servicing a hospital or a care home. They're the only employee, so to speak. So if they're not there, the job cannot go on. You're an incorporated person. So what CRA says is you are still supposed to file your taxes as an individual. So if you've gone to incorporate, the same thing to do will be to close out that corporation and file as a sole proprietor, write off your expenses in that under that umbrella as well. However, if you are coming up with a corporation, then know that the rules that guide corporations, you are following them, and you are able to deduct your taxes, so to speak. The thing is, when you are a corporation and you are earning income as a corporation, when you want to withdraw that income, you still have to pay taxes on it. So in the end, it balances out somehow. So I keep telling people, unless you actually have to, there is a motive behind incorporating. Weigh the cost and see whether it actually makes sense before you go there.
Thank you for that. So, and that's the beautiful thing about the CNP organization. There's lots of resources that are available because all this looks extremely complicated. So if you are thinking of going into a business, you're thinking of either starting, a self-owned business, going into partnership, utilize the resources that are available to CNP where you can speak with consultants. You've seen the advertisements from different business sponsors that we have with us within our community. Take advantage of them. Learn more about what you're going into. That way, you will know the best way to benefit and to just rub your mind and have a better understanding of how to chase your dream. So we are running out of time. We do have 20 more minutes. I want to make sure that we cover all the many questions that we have. So another question here is for new incorporated business last year, for a newly incorporated business, say in last year, in 2022, but incurred some startup expenses. Will the incorporation file tax this year, 2023? And how will those startup costs be captured? So again, the business was incorporated late last year, and they also incurred taxes for startup, expenses for startup. How do they go about it? Will they file taxes this year, or they have a window before they can file their first tax? So let me give it to Germaine.
So the corporation taxes is, again, it depends on your year end for your organization, right? Like you said, if you incorporated in 2022, year end, like typically is 1 year, depending on whatever month that you incorporated, right? You have 1 full year. Again, it depends. You can choose the calendar year, which is like January to December, but you can also choose your own year end based on like the start of your incorporation. So for example, if you incorporated in October, so you can run from October all the way to September 2023, and that is your full year. And then at that point, now you can now file your taxes. So any expenses that you have incurred during that period, you can now use it in your tax filing. Even if your income is zero, it's always still advisable, always file your taxes, whether that's zero income or just file. And the thing is that if you incur losses within your business, you can carry those losses forward, right? So don't say that, no, I don't have any income, so I don't want to file taxes. File your taxes, incur your losses. Those losses will help you in the future when you make revenue.
They become kind of tax credits, right? Okay. So the next question will be for Ms. Eyitayo. Question is, if you have opened a TFSA without filing tax, is that an issue?
You open the tax-free savings account ahead of filing your first taxes?
Yeah, let's assume that, yeah.
No, it's not. So you can do, everybody has a window for each year. So do your TFSA, fine. Then when you're filing your taxes, just identify that, yes, you did contribute to a TFSA, that's it.
So that brings me to the next question. If you see in your notice of assessment that there is no TFSA window for you, you've been filing your tax year after year, what happens?
I'm not sure that's possible. In any notice of assessment, at the very bottom, you have your TF tax-free savings account limit written, and then it shows how much has accumulated over the years. So it's going to be there. Maybe you cut off, maybe you cut off the page before it printed or something, but it has to, if you've been filing, if it's your first filing, then maybe it will be zero. But going forward, after your first filing, it has to be there and it accumulates.
Okay, so that means if it's there and it says zero, you can contact CRA or your tax filing consultants to help you rectify that?
Yes, you can contact either party, but ideally, your first port of call should be CRA. That there will be an error, but honestly speaking, I've never seen it.
Okay. All right, so the next question here is there any time when you earn less than $30,000 as a business owner and you have to pay GST or HST? That question to Ms. Germaine.
So again, in terms of the GST, HST requirement, if your business income is less than $30,000, it's optional in terms of collecting, because you're basically just a medium that the government is using to be able to collect tax from people, right? So if your business income is less than 30,000, the government does not require you to do that. But if your business revenue is more than 30,000, the government requires that you become a GST registrant and then you collect and remit to the government. So is there any time when you earn less than and you have to pay? So it's not paying GST. I think this question, like, you are collecting. So what is GST, HST in Ontario? I'm going to use Ontario, is 13%. So for example, if you're a business owner and let's say that you provide service to somebody for $100, if you are a GST registrar, meaning that you're supposed to collect GST on behalf of the government, in addition to the $100 that they're paying you, you're supposed to collect an additional 13%. So that will be $13. That $13 you're setting aside because you're supposed to remit that money to the government. So that's what it means by collecting GST. The government is just using you as a medium to be able to collect taxes from people based on services, right? So but you have to remit it back to the government. The beautiful thing when you are collecting is that whatever you also pay for GST, you can now deduct it. So you only pay the difference between of what you collect versus what you pay, right? But less than 30,000, you're not required to, but as long as your income is more than 30,000, that is the requirement from the government that you become a GST registrant.
Yes, Madam Funke, go ahead.
Okay, so just to add to what Germaine said, I may be, I want to add to it by maybe trying to preempt what the person that asked the question is asking. There are some instances where you don't have to earn up to 30,000 to be a GST registrant. For instance, as an Uber driver or the taxi businesses, the government actually enforces that they do register for GST ahead of the 30,000 mark. So yes, you can have to pay GST or have to register for GST before hitting that 30,000 mark. Then if you're actually running a business that is GST reliant, so to speak, as in when you're buying stuff, you pay GST. Even if your income, you've not started receiving income, because you're paying our GST, you can actually claim that GST. So it might be to your advantage to register ahead of your 30,000 mark. So those are things that you need to put in mind before saying, oh, I don't want to register for GST, or oh, I'll register for GST. Yes, there's the 30,000 hit mark, but if you're an Uber driver, DoorDash, Taxify, or all those other things, it is compulsory for you to register for GST ahead of your 30,000. Then if you're doing business that ensures, that makes it compulsory for you to pay, maybe you're buying stuff, you pay whatever you're buying has GST in it. It pays you to register for GST so you can claim those, what they call them, input tax credits. You can claim them.
Okay.
Yeah.
Okay, thank you for that, Ruth. So the other question here is about RRSP. So we do have very limited time. So a lot of these questions, as we mentioned, is covered already during the presentation. Do go back to the link once it's available and have another listen for some of this information. However, you can briefly cover this. And when is the best time to open an RRSP as a newcomer? And while addressing that, can someone put in money into RRSP to reduce taxes here? I know the answer is yes. You earlier on shared it has to be done by the deadline of March 1st for it to count, right? So, but the next question you can answer that, which is what is the best time to open an RRSP as a newcomer? Germaine?
So for RRSP, that is you saving towards retirement. Your limits are based on your income that you earn. So if you're not earning income, means you're not working. I don't think that you can have an RRSP until you start making that income. And I'm not sure, Funke, if you have, I'm not 100% certain about my response to this particular one, but I think you cannot have an RRSP account if you're not employed. So until you are employed, then this might apply to you, but I'll let Funke take this.
Yeah, RRSP is not the contribution or what gives you the ability to contribute is not 100% employment income. I know if you have rental income, you can have that RRSP contribution as well. So yes, but as a newcomer, having rental income is almost mission impossible, so to speak. So again, to what Germaine said, you have to have a form of income. So even if it's rental income, even if it's employment income, whatever form of income that contributes to that window, you have to have earned it ahead of opening an RSP account. Yes, you can go to a bank and they will offer you, do you want to open an RSP account, XYZ? But note that there are some times when you do open an RSP account and you do not have that contribution window, you are going to be paying penalties for paying into the account. So if you pay and you're not eligible to pay, you pay penalties. If you pay more than you are eligible to pay, you pay penalties. So you need to be informed before you can start paying and opening. The banker's zone is just to open. The financial advisor zone is on. All of them are on commission or earning something based on whatever it is they're asking you to do. So don't think they are doing you a 100% favor.
Okay.
And
okay,
can I just interject? I need to interject a little. Sorry. You have to have earned income to open an RRSP. You must have earned income. The best place to go if you're not sure is CRA. Pick up the phone and give them a call and they will tell you. If you go to the bank, just so you know, most banks will ask you, do you have room? Because they know that if you put money in, you can come back and say, you did not provide me the right advice. So if you don't have even TFSA, if you come into Canada today, you cannot put 88,000 into TFSA. You're new to Canada. So please, the best place to go if you have doubts about your room for RSP or TFSA is CRA. Call the number. They will answer you. Thank you.
Thank you, Lady Abba, for adding that. You always see it in your notice of assessment, the room for contribution. That's another opportunity. That's another reason to file your taxes. And then the other question here is, in instances of making a lump sum contribution during RRSP season, from a lump sum bonus and maybe a tuition credit, would that be a time to be happy about the lump sum refund? So very, very briefly, in 30 seconds, if possible, can any of you tackle that question? I know you mentioned it earlier, Germaine, when you said about rejoicing over salary increase and bonuses.
Yeah, again, it depends on your circumstances. You'll be happy, let's say, if you need the money immediately, because again, if you make the RRSP contribution right now before the deadline, that counts towards your taxes, right? So you're going to expect to get a refund based on that. So if you need the money, and take advantage of it and do it, especially if you are in a high income tax bracket right now, it will give you a good chunk of change if you make that contribution. And then tuition credit as well, all of that, they're all credits that will go to offset any tax expenses.
So what is the individual tax implications for things like assets outside of Canada inheritances, property, and things like that. Funke? Is there any individual tax implications for assets outside the country? Inheritances, property?
Okay. For inheritance, because the inheritance will come after the fact, I can't speak to that. But for the fact that you come into Canada, you had prior assets before you came into Canada, I advise my clients, declare them. And they do have a choice to declare or not to declare. But the reason behind declare them is this. Sooner than later, we want to buy property here. Sooner than later, we want to start liquidating assets or whatever investments we have back home. When you want to liquidate over there, the funds that you make over there, you want to bring it in. So unless you're doing fund exchange under the table, you want to bring in, let's say 50 million or 100 million in Canadian dollars, you want to bring it in. And you want to bring it at once because you need it at once. It will be crazy for you to send it through your bank and the bank asks you and you are unable to explain. You understand? Because there will obviously be a financial trap on that transaction. And the questions will be there. You sold your property, okay, so how much did you sell it? Did you make capital gains on it? XY, CRA is always interested in those questions. But if you declare that asset ahead of the first filing and you sell it at maybe whatever gain you sell it afterwards or at a loss forever, however the income comes, if there's a profit, you know how to deal with it. But the profit that you're going to deal with will just be the profit of the value after you came into Canada, not from when you owned assets.
Mm.
So those are things that you just need to understand. In the end, are you being smart or are you being smart?
Mm.
What do you hope to achieve by keeping the knowledge or the information that you do not have an asset wherever? If things happen that you need to move the funds, how do you now do it? Legitimately. So those are the things one does. If you have assets, declare it. I mean, they're not going to ask you to sell your assets.
Very valid point.
I'm just going
to start
to that too. So sorry. You're very, very correct. You have to declare it. Remember, banking in Canada is so different from banking in Nigeria. If you bring a lump sum in, they want to know where the money comes from. There's something called anti-money laundering. They need to know, how did you get this money? But if you say it ahead of time, they are aware, because you're coming as a PR, permanent resident. They know that you had life, you had properties before you came in. So it is important that you let them know that this is who I am, instead of just hiding under one finger, because it becomes very complicated, even with your bank and CRA. So please declare.
So I'm going to ask,
someone just asked a small question here that says, if you bring the funds out in small bits, whatever small bits you bring, you're either bringing it in through email transfers. Those email transfers hit your account. As they're hitting your account, your bank is recording. And yes, they've not flagged you. But when it comes the time when they need to flag you, then you will know that all these things are not hidden.
I'm going to act like the CRA. At the beginning, we had 5 minutes delay to start. So I am collecting that 5 minutes back. So please give us additional 5 minutes after the hour. So let's quickly, there's a very important question here for an international student. He says, so for an international student without a Canadian job, how do I file for tax being in Canada for 2 months? Is there any tax returns available for international students? So Lady Funke, in 1 minute, if possible, or less.
I'll try. You don't have to earn income to file a tax, like I said. During COVID, international students benefited a whole lot. So whether you're earning income or not, file your taxes. Whether you've been in the country for 1 day or 1 month, file your taxes. That's just it.
During the tax season, applicable tax season, yeah. When you refund RRSP that was utilized for first-time home buying, does it impact your tax? If yes, is it positively or negatively? Again, Madam Funke.
Let me give that Germaine this one, since she has an area of specialization there.
Okay, Germaine.
So with RRSP, so if you remove money from your RRSP for the purpose of buying a home, there are certain criteria that you're supposed to meet, right? And of course, there is a payment plan that you're supposed to go follow. As long as you follow the payment plan that is agreed by the government, then you do not have any additional implications. But if you don't, then that amount gets removed from your, because again, remember that we have contribution limits, right? So if, for example, you're expected to pay, let's say, let me just say you have $10,000 in your RRSP, and then you withdraw $5,000, and then the government says that every year pay me back $1,000. The moment you forfeit the payment of that $1,000, it gets removed from that limit, your contribution limit. So you have to keep within the timelines that are given for you to be able to pay back.
So I just want to quickly add to that. So home buyer's plan, you can put it back into your RSP. The home buyer's plan you have, I believe, is about 20 years to take it back. So if you take 10,000, you divide it by 20, you have to put that amount every year. Okay, so the maximum you can take out of an home buyer's plan as of today, I don't know if it's been increased for 2023, is about 35,000. So let's say you took 35,000, divided by 20 or 25 years, that's the amount the government recommends you pay back. Remember, your RRSP is for retirement, but you have the option of taking it for first-time home buyer. Also, you can take it for lifelong learning, but you have to put it back because it's meant for retirement. If you now don't put it back, let's say the amount you're supposed to put back is 2,000. If you don't put it back in the RSP account, they now had that 2,000 on top of your income. You now pay tax on it. That is the way it works. So you don't lose your room, but you will lose the room if you don't put it back on an annual basis.
So I don't know if you all have seen the contact information for CRA. It's now being posted. Lady Abba posted it, and also has given a very, very wise advice. Make sure that you have other means for retirement. So while you're also doing, contributing to RRSP, make plans, save money, make investments. There's so many things that you can take advantage of within this environment in Canada. So a few more questions. Two more questions I have is, so regarding your mortgage payments, can you use it the same way you use your rent receipts when filing your tax? For those that own homes, are they able to utilize their mortgage payments as the same way they're filing taxes, they submit their rents and all that? Ms. Germaine?
So it depends on what kind of taxes you're filing, right?
So like personal, when you're filing your personal tax, not as a business, but as a personal.
No, for personal taxes, you cannot claim any, and even with businesses, you do not claim mortgage payments. It's the interest on the mortgage, right? And property taxes that you can claim again, and it's only for the portion of, let's say, your home. If you're working from home or you're claiming that part of your home is used towards your business, you have to deduce what percentage of your home is your business space, and then you can only claim that percentage on your interest on your mortgage and your property taxes and utility bills and all of those things for business income, but not on personal income.
Wow, there's so much to talk about when it comes to taxes. We don't have, the 2 hours is not enough. So in 30 seconds, each of you, what will be your final word for us to take away? Starting with you, Madam Funke, what will be your final word?
If you're not sure, ask someone who is a subject matter expert. File your taxes as and when due. Pay your taxes as and when due. And have a nice life.
You, Ms. Germaine?
Yeah, so like Ms. Funke said, if you're not sure, always ask an expert. And then again, like I said in my presentation, never be too excited about a big refund. You know, if it's possible for you to get that money early on in the year by knowing those deductions early and applying to the government, because like you can inform the government well in advance that these are the kind of expenses I'm going to have. Then automatically from the beginning, they will give you the exception. Because again, the money you have in your hand, you can use it to do so many things and wait throughout the year to get it at the end of the year. So always, think about those things, strategize, and limit the amount of money you leave with the government, because that's just borrowing money interest free. Meanwhile, you're borrowing money from the banks and paying huge interest.
Thank you both. Thank you so much. We'll go back to the CNP slides now. We have just 2 more slides to share with you. So first of all,
can I just quickly jump in? There's
yes,
a
please.
question on the chat that I feel it's important that we address. What if you move the funds in bits and pieces and not lump sum? Very insightful session. How does one correct this wrong, assuming one did not declare? Does anybody want to give this person some insights?
Madam Funke?
I'll say if you brought, I think I've addressed the bringing funds in bits part, where I said yes, it's not trackable now, or I mean it hasn't been escalated, or it's not in anybody's purview now. There will be a situation or circumstance that will warrant them checking and they can see those transactions. Now, if you did not declare this asset at the onset, and you actually have to bring in funds, you may have to do a whole lot of documentation that shows that the asset was in existence as at when you did relocate, the value of the asset as at that time, kind of like ratifying things that you did not do at that time. And then maybe before CRA flag it up with them that, oh, when you were filing, you were ignorant of a number of things and all that. A whole lot of times, ignorance is no excuse, but the thing is, you're bringing it to their notice now rather than after the fact.
Which is a voluntary declaration.
Yeah, so if you're doing that voluntary declaration, you get your paperwork in order, you get as much facts as you need to get together, and document that with them such that when you now need to move those funds, you're not doing it as though you're stealing your own money.
Okay, and is that the same way? Let's say you're filing your taxes, you missed something, you realize, okay, I bought my house in 2019, I filed my tax, I did not declare, I did not capture it then. Is there a way to rectify that as well? Can you go back and rectify that?
In buying your house, I do not see a situation where CRA is not aware that you did buy a house. However, if you want to claim the home buyer's credit, I maybe that will be where the question is coming from. The situation of, I think it's where you're selling your house actually that might now be an issue. If you sold your house and you did not declare it, and then there is a question. Because when you sell your house, there is the capital gains tax, especially if it's an investment property. If it's your personal house, you do declare that you did sell it, but there is no tax implication to that. If it's a house that is your what do they call it again now? Your primary
place of residence.
Primary place of residence. Yes, thank you.
So thank you so much, everybody. Thank you for your engaging questions. The questions you asked were so intelligent and so appropriate, because it got us all the opportunity to learn and better understand how not to only the responsibility of filing our taxes, but also to benefit from it as to the best possible way. So go back to the slide. You will see our contact information for CNP. You can see our social media handle there. Do follow us on our social media. We always have things posted on LinkedIn. We tag our partners and people that support us. That's how you'll be able to learn more and also share. We want to have more partnerships. We want to take advantage of everyone within our community, because when we all create that platform to know ourselves better, we're also able to support our individual businesses. So please visit our website, get to know what we're doing and all that. The next slide. Thank you. I took more than the 5 minutes, but you know you can always ask for it next time. So thank you so much. No interest. Thank you, Madam Funke. Thank you, Germaine. Thank you, everyone, and enjoy your weekend.
Thank you, everyone.
Thank you, Lady Abba, for this opportunity through CNP. We can't thank you enough.
Thank you, Madam Eyitayo. Thank you, Madam Umdia. Thank you, Madam Mishilea, and to everybody that joined, sincere appreciation. Thank you. We hope you learned one or two things. Have a wonderful weekend.
You as well.
Thank you.
Bye.
Bye.
Bye.